Good evening, everyone. My name is Hannah Daniel. Welcome to today's webinar. We are going to talk about Kiwi, New Zealand dollar, their economy, and hopefully come up with some strategies that you can take away from at the end of the webinar today. Before we start, I really want to welcome everybody who's joining us right now. Could you please type in a Y for yes if you can hear me? And type in thank you so much for interaction. Type in double yes if you can see my screen. Right now my screen is showing, well, me, as well as the title of this webinar, which is Kiwi Trading, an overview of New Zealand economy. All right, awesome. Thank you so much. Welcome, Barris, JC, Stefan, Veronica, Melissa, Mohammed, and everybody else who is joining us. This is a live webinar, and definitely, please ask any questions that you might have. Welcome, RT, London. I'm guessing you're from London. If you have any questions, definitely type them in the chat box. I can see it right here. Hopefully I'll get to answer your questions during the webinar. So without further ado, let me tell you what I have in the gym. Before that, though, I have to show you this, the high risk investment warning. I'm sure a lot of you already know that, but I really want you to make sure that you understand the risks that are involved if you are trading on margin, which means that if you are trading on leverage, what is leverage? Leverage is the money that you borrow from your broker. If you win, you're going to win big. If you lose, you're going to lose big. So pay attention to that. Understand your risk tolerance before you get into trading and before you start using the leverage. And if you have any questions about that, I'll be happy to answer that yourself. Your risk tolerance is different than everybody else. It depends on your own financial situation. All right. So today's agenda, we're obviously going to talk about New Zealand's economy. I also would like to briefly talk about the FOMC rate decision, and not the rate decision, actually, the FOMC meeting minutes that came out yesterday and created kind of a volatility, but it was very interesting. So I wanted to mention that. And then we're going to go and do a technical analysis on as many Kiwi crosses as possible. I think my audio just disconnected for a second. So yes, welcome Dekunola, Gopi, Hubert, and all the new people who are joining us. Yes, Stefan, I noticed that I think there was an audio misconnection with the webinar platform. So without further ado, this is Mr. Kiwi, or New Zealand dollar. That's how we call him at Investiva.com. And by the way, for those of you who don't know me, I'm Kiana Danielle. This is how I look like. I'm the CEO of Investiva, and I provide wealth management, investing, management, education on my website, Investiva. I'll talk about this a little bit later. But before that, I want to really get down to business and see what has been happening in New Zealand. In the past few weeks, we've had a bunch of really market-moving events out of New Zealand, and some of them really haven't been coming out the way we predicted it would be. So right now is actually a very interesting time to get to the bottom of that and see if there is an opportunity to trade in Kiwi, and if there is, which Kiwi crosses should you be trading? So first of all, what came out last week, what was the interest rate decision? And well, it was very highly anticipated that they're going to cut the interest rates. I think I did cover that in our webinar before that, or talked about it. I missed it, I'm not sure. But so everybody was anticipating to do that, and that was and that exactly happened. So their interest rates was 2.25%. They cut it to 2%. And the problem with that, so as you can see, it failed to devalue the New Zealand dollar. And so the reason why they cut the interest rate was obviously because New Zealand, who do rely on exports and as their economic force, they were trying to devalue the New Zealand dollar, but it didn't help. And the reason why it didn't help was because people were already anticipating that it is going to happen. So it was already priced in. This is a very perfect scenario of buying the rumor and selling the actual fact. And so what happened was that exactly. So we got a reaction. Let me see where you have a PayPal payment option for your new book. Oh, I got it from Veronica. Yes, Veronica. I've noticed that some people who've been trying to buy my book have been not able to get past the credit card. So for those of you who are trying to get my book, let me just answer questions one by one. You can go to investiva.com, and we have a very nice lady over here, Nicole, who will guide you. So why don't you just go ahead and talk to her on the chat box, and she will guide you how you can make a payment via PayPal. We don't have that yet as a on our system on the books, but if you contact us directly, we can help you how to do that. All right. Well, thank you, Veronica, for trying to buy my book. Anyways, back to New Zealand dollar. Yeah, by the way, keep the questions coming, all right? So that's exactly what happened. So let's talk about what the RBNZ said in their press conference after the rate cut. So they did the rate cut, and they promised to provide more easing this year. And but in addition to that, so one of the other reasons why Mr. Kiwi or New Zealand dollar didn't really react or devalue on this news was because New Zealand's retail sales printed 2.3% on a quarterly basis versus the 1% expectation. So that showed that the New Zealand economy is doing really exceptionally well. And the inflation battle, which is the main concern of the RBNZ, appears to be fighting, and it doesn't mean the economy is weak. So the Assistant Governor, John McDermott, noted that the economy is growing quite well, so you don't want to overdo it with the easings, right? So he also noted that the tradable inflation appears to be the headwind that the New Zealand economy is facing, but then again, so is the rest of the world. So it is very true that New Zealand is probably even doing better than a lot of other economies. Let's say Britain, for example, right? So with that in mind, well, this itself just gave us a little bit of a optimism on the Kiwi dollar, the New Zealand dollar. And so after that, it was 2 days ago that we had the retail sales coming out. I'm sorry, the jobs report coming out from New Zealand, and it was way better than expected on the quarterly basis. Let me actually show you on the economic calendar. Let's go to Orbix.com, or actually FX Street. Orbix.com uses as well. You can also find that on Orbix.com. So we go to the economic calendar. We're going to show the filter. Let's see what we've been getting in the past month out of New Zealand and what we're going to get until the end of this month. We're going to filter that. We are going to only check New Zealand and only the important ones. So we're going to filter the results and see what's been going down. So first, the trade balance was pretty good on a monthly basis. Year on year, it wasn't as good. So they are growing on a monthly basis. On the year on year compared to last year, it wasn't as good. The interest rate cut happened last week on August 10th, and they cut it. We talked about the policy statement and what they talked about, and then we had the retail sales on Thursday, which came in way better than expected. Again, another thumbs up for Kiwi. And then we had the employment change way better than expected. It was last quarter, it was 1.4%. It was expected to actually go down to 0.6%. It came out way better than expected and better than last time at 2.4% unemployment rate. So this we wanted to be smaller than before, and it came in lower than last time. So there are less unemployed. There is 0.1% less unemployed people than last quarter, and the expectation was actually again that it goes up. So it beat the expectations. It was great, and then we had the participation rate also coming out better than expected. And well, coming up, also these are the stuff that you do. I mean, so far this month we've had nothing but, I mean, we had the interest rate cut, but it wasn't enough to devalue the New Zealand dollar because everything else in their economy is really panning out well for them. And so coming up next Tuesday on August 23rd, we have their import-export trade balance. This could also create a little bit of volatility. But so far, on the fundamental point of view, we're having, well, kind of a good news. And one other thing that I want you to keep in mind is that New Zealand right now, what season is it? It is almost the end of winter, and they are heading into spring. And because New Zealand really relies also on their farming and natural resources in spring, their economy even picks up even more. So that is something that you also want to keep in mind for your future trading and long-term trading. Let's see if you have any questions. All right, so any questions up until here? Welcome, Melissa. And who else do we have new here? Hubert is now online, offline. All right, very cool. So no questions. We're going to go back and talk a little bit about the FOMC meeting minutes that came out yesterday. And so it was interesting, right? It was not that different than any other FOMC meeting. It was even rather positive. But the US dollar had a bearish reaction. So what's up with that? So a lot of people are, so first of all, let's first check into the facts and see what happened. So the officials in Fed, they talked about three specific global developments. Number one was Brexit referendum that we talked about in the webinar last month. They also talked about the Italian banking crisis. And number three, they talked about China-related developments. And regarding the Brexit referendum, most Fed officials agreed that the pro-Brexit vote appeared likely to have little effect on the U.S. economic outlook in the near term. However, the negotiation process for an actual Brexit process hasn't started yet. And that could have a potential to increase the political and economic uncertainties in that region. All right, so that is something you could, but I also am going to take a look at British pound, and technically it's actually a very interesting time right now. So I'm going to take a look at that as well later on. And so these uncertainties in turn could result in, so I'm now quoting, in spells of elevated volatility in global financial markets, and that could affect economic and financial conditions in the U.S. Another global development that the Fed is keeping an eye on is the Italian banking crisis, as I said, and the non-performing loans at some European banks could also weigh on economic growth in the region. Do we have anyone from Italy joining us today? Do we have Italian? Let me guess. Do we have any Italian-looking last names today? Hubert? Italian? No? All right. Okay, so Italy could also have a potential impact on the U.S. economy in the coming in a longer term, and the weak capital positions weigh on the economic growth in the region. And there was no immediate threat to the U.S. banking system, and the capital and liquidity positions of the U.S. banks remain strong. In that sense, this is a little bit actually like positive. Like they're looking at it, but it's not that bad, right? And then finally, they talked about China, and they zoomed in on the uncertainty about the outlook for China's foreign exchange policy and the implications of China's run-up in debt support and in debt to support its economy. And they actually didn't share the specifics of their discussion on China. One other thing that they didn't mention was the U.S. elections. We're going to talk about a lot about U.S. elections next week. Stay tuned for that. But I really do believe that that also has to do something with current U.S. dollar bearish outlook. And so they also talked about real estate and equities. They really revealed that several participants discussed the potential overvaluation of the commercial real estate, as well as elevated level of equity values relative to expected earnings. And this discussion was in relation to the recent investor activity of buying up equities and real estate, commercial real estate, as a mean to get higher yield in a world with low and even negative interest rates. And so far, there are no imminent signs of real estate bubble or a potential stock market crash, according to the Fed officials. Right? A lot of people are predicting, oh, the market is going to crash. Da, 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 da. At some point, they're going to be correct. But because every market is, I mean, what goes up must come down. But there is no, according to the Fed, there is no immediate threat on that end. All right. And so the Fed is in then wait and see mode at the moment. So they were actually a little bit divided during the July's FOMC meetings. And a couple of members, for example, were not willing to commit to further rate hikes and were interested to wait for more evidence that inflation would rise to 2% on a sustained basis. And meanwhile, some other members were still open to hiking rates in the future, expecting that economic conditions would soon warrant taking another step in removing policy accommodation. And there was also one member, who shall be nameless, who voted for a rate hike then and there. So that one member cited the easing of financial conditions since the UK referendum to the return to trend economic growth, solid job growth, and inflation moving towards 2%. Were all good. And we already know that that sole person was Kansas City Federal Reserve President Esther George. She was a person who basically said that members that why not just increase interest rates today, right? So that was like a little bit of a positive. Like this could have been at least not a bearish thing for USR, right? So because members generally agree that before taking another step in removing monetary accommodation, it was prudent to accumulate more data in order to gauge the underlying momentum in the labor market activity. So looking at that, so the right. All right, I'm losing my words right now. So the immediate after effect of the meeting minutes after it released, the US dollar just dropped. And so that could be that simple drop in the immediate after effect of the FOMC meeting minutes could be because of lack of forward guidance and the Fed's wait and see attitude, and therefore apparently hurt rate hike expectations once more, which is probably why it tanked it again. But there is another scenario that has been going on, and I actually do believe in that one as well, because this wasn't like that kind of a crash. Like USL shouldn't be this low right now. And so I was reading today on MarketWatch that Mark Chandler, Global Head of Currency Strategy, said that a rash of maturing treasuries will leave foreign investors with billions in cash, which means a lot of supply of the US dollar, looking for a home, looking for an investment. And given the rising cost of hedging US dollar denominated investments, they might not be able as eager to reinvest that money in the US. So basically, this could be a simple supply and demand problem, which means there's a lot of US dollar in cash, and people are not willing to sell it. It's not even about the demand. It's people are not willing to actually give it away. People are not buying it, and those who have are not selling it. So with that, the US dollar, that could be one of the reasons why the US dollar is also weak right now. So with that, we talked about fundamentals. Do we have any questions up until here about the fundamentals? If not, we're going to move on to the technical analysis on a bunch of Kiwi crosses. So since we already covered New Zealand economy as well as the U.S. FOMC meeting minutes, let's take a look at the chart and see what happens. So this is the daily chart of Kiwi versus, oh, what did I do? Thank you. Kiwi versus the US dollar, right? Let's take a look at this. What is interesting in this chart? So first, take a look at this chart and just tell me, what do you see? What is an interesting point that you're looking at? I'm going to wait for your answer. Do you see any interesting technical development on this daily chart of Kiwi dollar? Let me rephrase my question, for example. All right, so I'm getting answers. Uptrend making higher highs followed by higher lows. That was Kim. Yes, very good. That is definitely a good answer. Then we have, here's the resistance. It hasn't been broken. Yep, great job. Let me actually bring this up so I can see everything. Hold on. So we have the answers. There is a resistance. Yeah, what is the exact price for the resistance? Yeah, so the exact price right over here. So everybody, you were very, very correct. So there is an uptrend, higher highs and lower highs even. So this is just with the naked eye. This is the Ichimoku. If it confused you, we're going to talk about that as well. And there certainly is a resistance. For those of you who were not able to spot that resistance, it's right over here. This is the level. You see, so when you're pointing out a resistance, there is never an exact number for that, right? So this is a zone that the pair has tried before. These are the shadows of the candlestick. It was not able to break above it, went back down, was not able to break below the Ichimoku cloud, so it was supported by the Ichimoku cloud, then went back up, and right now, after last week's interest rate cut, which was pretty crazy, it was a lot of volatility that day, and after the retail sales and after employment, it still hasn't been able to break above it. So that is the first key point that we see. And as far as the uptrend, let's bring it in and in parallel channel. Let's see if that is in fact a channel going up. So we're going to connect the higher highs. As well as, what happened to the next of it? Parallel channel, sir. Parallel channel. Hold on. So sometimes these new parallel channel, I'm going to try it one more time. So you're not going to try to fit them in. I mean, you can draw this parallel channel different ways, but this is the way that it exactly fits in. So as you can see, we have Kiwi dollar moving within a parallel channel. So what does this mean? So this first one, 0.73, almost the 0.73 level, is one of our key resistance levels, obviously in daily chart. And then within this channel, we also see an angled resistance. So this first part is another channel. And if you extend this, what happens? If you extend this, this is our new pivot point, right? So that is going to be our new resistance. So all across between this resistance level and here, so that is going to be our next level as the pair, if the pair, so here was the main important point, right? But now if the pair even breaks above it, then it has this one too as a barrier. And of course, this angle, the lower band of the channel, is the support level. All right. Let's see. It seems like again, I somehow. Okay, great. So the questions, the answers are great. Yep. So 0.72. Actually, it's 0.73. Where is the resistance? All right. And another thing about this chart is obviously the Ichimoku cloud. It broke above it, and that was a bullish. That was our first bullish signal right over here, and it's been going up ever since. All right. So what else? So this is basically right up just about it on the daily chart. Let's switch to a longer term point of view because we want to see where it can go in a longer term. All right, what is going on with this chart? Okay. So this is the monthly chart of Kiwi dollar. The uptrend that we identified is very vividly visible even on the monthly chart. But another thing about the Kiwi, okay, so tell me what you see in this chart. This is a monthly chart. So what are some numbers or where is the support level? Let's see, where is the first support level for Kiwi dollar on a long-term basis? The first support level. So while you're calculating that, another question is, what should I do with this to get a pivot level and a resistance level? So identify for me a pivot and a resistance level, and also tell me in the long run, what else do you see in this chart? Could be a little bit confusing sometimes, right? All right. Melissa, you're on. What is the support level on the monthly chart? Stefan, Veronica, and Kim, JC, Hubert, Gopi, Baptist. Am I pronouncing you right? Your name right? What is the support level? This seems to be the tough one. All right. So the support level is basically the low, well, the most recent low or the most recent bottom out, which is this one, right? 0.63. This is the lowest it has been in a long time. We're going to paint this one purple. So now that I identified this support level, let's see how important the support level is. Has this been an important level in the past? Let's zoom out. Let's see. So this is a very long time, since 1973. Has this 0.63 been tested before? So looking at this, we see that yes, in 2006 it was briefly a resistance. So it's a resistance turned into support. In 2004, it was actually not quite this. It was a little bit below that. That was a support level. And then again, in 1990, again, it was a little bit below that. That was a resistance level. So it's interesting that this time, I'm going to actually change it based on the shadow, because this seems to be the real support, 0.62, because the shadow here, but then here it's more vivid, and then here is more accurate depending on what happened before. So 0.62 is our long-term support level, and it seems like the pair actually bottomed out. Another thing that we can argue, okay, now I'm getting your answer, 64, yes, that's correct. And Melissa, that was good. So 64 is a little bit higher up actually. So 62 would be a longer term support. And another key point that you want to pay attention to this, it's very similar to that short term. Everybody understands what we're doing here, right? So we zoomed out from daily chart to monthly chart. What's significant about this is that each of these candlesticks were built in 1 month, right? So these are the basics of somebody if you don't know about it. And so with that, previously, let's see, there is another interesting development. It's the higher lows that have been moving higher. So this was the all-time low in 2000 per Kiwi dollar, which was 1 New Zealand dollar was only 40 cents in US dollars, which is crazy. And then next time it bottomed out, it was in 2009 after the market crash, and it was at 0.48, which is again crazy. And this time we're having, well, our new, why did I do this? Right? So it seems like, again, we're having an angled support level to the upside for Kiwi. Doesn't quite fit, but it could definitely be a sign of an eventual uptrend. And if you look at this one, even the higher highs are kind of moving forward, even though here it was the ultimate resistance level, and this time around that the higher high didn't move forward, didn't move upward, and it was stuck at this exact same level at 0.87. So as you can see, so here the higher highs were moving up until we got into 0.87, and the next time we tried it, it was not able to break above it. So on the resistance side, the pair is kind of stuck at 0.87. This is again a very long term. All right. Question. I think I'm getting your answers and questions using upward trend line. Looks like it's forming a head and shoulder formation. Wait, who said that? Head and shoulder formation. Kim said that. Head and shoulder formation on the monthly chart. Yeah. So as a lot of you guys mentioned, Gopi, JC, Veronica, Melissa, yes, as a lot of you mentioned, we're seeing kind of an uptrend forming even on the monthly chart. So right now, our daily and monthly are in the same page. They're both kind of moving upward, and that is a very important factor. So guess what is happening? Guess what is happening? So I'm sure a lot of you guys, if you have my book, you probably know about it. If you don't, if you have taken we have a lot of Investiva students actually today. Thank you so much for coming in. But for those of you who haven't taken our Investiva education, let me just quickly show you something that we use. Login failed. So for those of you who've taken our education classes, you already know. For those of you who haven't, I'm just going to quickly give you an interesting strategy, which is called the Investiva Diamond Analysis. So right now, so the Investiva Diamond Analysis, what it basically says is that you want to analyze the market, any market. I mean, it doesn't even it's not limited to forex trading, any financial market. You first want to do a fundamental analysis. We did that already for Kiwi and US dollar. You then want to do a technical analysis. That already with Kiwi dollar. You want to check the sentiment, which is the market sentiment. We're going to talk about that as well. And then you want to check your capital. That is your own financial and wealth management. Investiva students, they already are aware of that. If you're not, we'll talk about that later. And then you do an overall. So what happens is that you want all these points to point at the same direction. And so far with Kiwi dollar, we had the fundamentals basically saying, well, New Zealand economy is doing good while the US dollar is kind of under pressure. What does that tell you, by the way? You have a weak currency, which is US dollar, versus a strong currency, which is Kiwi, which is a very, very perfect scenario for trading. You want to pair a weak currency with a strong currency. So no matter what the reason was, we figured out that New Zealand dollar right now is doing well, and the US dollar is under pressure. Therefore, Kiwi dollar should be going up. We looked at the technicals, and it looks like, yep, the Kiwi dollar is in fact going up. So with that, we conclude so far 2 points of the Investiva diamond analysis are pointing at the same direction. Next was the market sentiment. So market sentiment, you can do it and you can gauge it in different ways. One way is if you want to trade right now. Let's see, we have a question. Let's see what the question is the rate cut of RBNZ good for New Zealand dollar? No, it wasn't. Kim, I think you were, or you weren't here when we covered that. Rate cut normally is not good for a currency, but this time, because the rate cut was very widely anticipated, it didn't really impact the New Zealand dollar. And also because they had a lot of other better than expected data coming out, that it kind of outperformed the rate cut. It basically did nothing to devalue the New Zealand dollar. And keep in mind that New Zealand economy, New Zealand, so RBNZ, they actually want to devalue the Kiwi, but their economy is just doing so well that is not helping them. All right, so far we've had 2 points kind of pointing in the same direction. So now we're going to go and check the market sentiment. So one way, if you're going to trade right now, let's say, with that, you kind of look at current market sentiment. What is going on right now? What the market is doing right now. So if you go back to 15-minute chart, it actually kind of is consolidating. Let's go back to let's actually zoom out one by one. 4-hour chart. 4-hour chart also kind of shows an uptrend, because can everybody see this? A break above the Ichimoku cloud, another resistance by Ichimoku cloud, and of course this is our resistance level at 0.73. It wasn't able, it's going back down, and it's trying to try it again. So this is what the current market sentiment is. It's trying to really cross above the resistance level. There is another way that you can check the market sentiment, and that is through the speculative sentiment. I have access to that. Let me just go and check what the signal is. We have to. Oh, sorry. The answer is I don't want to keep you. I mean, it's not that big of a factor, but sometimes I would like to check it out. So if you just bear with me for just a moment, I will check the current market sentiment based on the data, and I'll get back to you. All right. So I am taking a look at the speculative sentiment index. And so for Kiwi dollar, the majority of traders are actually shorting the Kiwi dollar. So this is a contrarian indicator. So if a lot of people are shorting a currency pair, that kind of means that that market you got to go against. So the strategy behind it is that do what the market is not doing. Go against the crowd because the 90% of traders are wrong. So with that, Kiwi dollar, turns out, even though we have all these points, the majority of Kiwi dollar traders are bearish on the pair. So that gives us one last and final point of the investigative diamond analysis in terms of your own analysis. So with that, I'm going to give you a bullish signal on Kiwi dollar, right? We have confirmed it. But how are you going to trade it? So here is the catch. Unfortunately, we have this very important resistance level. So one way to trade it has gone below it. If you're a day trader or a scalper, we can easily say, I mean, we could really assume that at least look from here at 0.7285, it is at least going to definitely reach 0.73. So that is a short-term strategy for Kiwi dollar. But if you're a longer-term trader, which is actually my preferred way of trading, so if you're trading on a daily chart, we're already above the HMO cloud. I'm going to use Fibonacci retracement levels to see what are our next stops to keep an eye on. So everybody's familiar with Fibonacci. We're going to use the retracement levels. And find out what we get. I did it on a very long-term line. It's not quite fitting on our current resistance level. It's like kind of this is our zone, it turns out. So this is our pivot level. We're going to point this out. So this 38% is our pivot. Another question coming up. Please, can you type out the price targets for us on the screen? Yes, absolutely, Veronica. So let me just get them out, and I will type them. I know that it might be a little bit hard for you to read, so I'll type it out. So this is our pivot level, and our next stop turns out to be the 50% Fibonacci level right over here. So that is 0.7531. I'm going to type it out again. All right. So if what happens, we can go ahead and target 0.7530, a break above current resistance, right? So this level is, I'm going to write it down here, is 0.7530-ish, right? Is this visible? Let's make it a little bit bigger. Okay, so this is our first bullish target. This is a long term, by the way, right? If the pair breaks above 0.73, repeat after me. If the pair breaks above 0.73 as well as, so if you want to be, so this goes back to your risk tolerance. And if you have taken investigative classes, you probably already know what I'm talking about. If you haven't, you should definitely go and take our wealth management class. I'm going to talk about it a little bit later too. But so if you have risk tolerance, you can go ahead, place a bullish order after the pair breaks above and confirms a break above 0.73. What does it mean, a confirmation above 0.73? That means not only it breaks above it, but it also opens. That's when you have the confirmation. If your risk tolerance is a little bit lower, you should wait for even a confirmation above this channel. Another way for lower risk tolerance is actually targeting the upper band of this channel. So wherever it goes, so if it suddenly breaks over here, you can just target the next stop, so which is around 0.7440. So we're going to point that out as well. 0.7440 is the end of the channel. All right, so these are our targets. So this is what you're going to wait and see for a confirmation. So you wait for it to break above that level. If it does, then you target 0.7530, maybe a little bit below it. Now, if it doesn't, if it starts going back down, then what do? That is when we're going to have to use support levels for two different kinds of trading scenarios. So if it's unable to break above it, the first thing you can do is to go bearish, right? And where do you target? You target the upper band of the Ichimoku cloud this time. And the upper band of Ichimoku cloud and the pivot, so the pivot point is 0.72. So if it's not able to do that, your first target can be 0.7224. So these are your support level as well as your stop loss levels. All right, turns out we lost. Okay, stop now. All right, thank you, Veronica, for letting me know. So this is our first stop loss level as well as our bearish target if the pair is not able to break above 0.7, right? And our next support is set at the 23% Fibonacci level, right over here, in purple, and it is 0.70. All right, can everybody see these numbers? So I'm going to just put them here in a little bit more organized manner. So these are the levels, resistance, and the final resistance on the daily chart for now. Questions? How do you arrive at the stop loss? What do you mean by that question? Audio is not excellent. I'm sorry about that. Can you guys hear me now? Is it better now? How do you calculate where to place SNL? Okay, so Veronica, as I said, so the first one was technical analysis. Based on my Fibonacci retracement level, the first stop was 23% Fibonacci level. So this is basically where it is. The second stop was the upper band of Ichimoku. Can everybody see the Ichimoku? Probably this is a little bit too colorful right now. I'm going to delete this Fibonacci, and so that you can see the Ichimoku, which is buried basically over here. So the upper band of Ichimoku cloud can also act as a support level, right? So support or resistance level. So that is how I calculate it. So that is one way of doing it. And then the other way is basically, it depends. So which one do you actually choose as your stop loss? That depends on your risk tolerance. That is very, very personal. So I'm going to take a few moments and talk about that because it's very important. And so for those of you who are actually Investiva students who are here today, you probably already know about that. So that we talk about, so if you take one of our financial therapy lessons, I go over your own personal finance, future plans, and what your current financial health looks like. And based on that, and based on the questionnaire that I give you to fill out, that is how you can calculate your risk tolerance, which is very, very important. Some of you are not even probably eligible to trade right now. I don't know. And so it's very important to know your own risk tolerance before you get into forex trading. And well, this one we're right now having a campaign going on. So definitely go ahead and book me if you want to do a financial therapy session or basically a wealth management session, so you know where you stand. I am going to make a wealth management online education course based on what I teach at New York University. So that is not yet. We don't have it. It's not available yet. We're working on it. So if you go ahead and sign up in our waiting list for the wealth management course, we'll send you a notification to find out when it's going to be ready and when you can go and access it. So definitely go ahead and sign up here so that you get a sense. But I really, really recommend that you guys know at least what is going on. For those of you today who have problems getting a understanding of what I was doing, the technical analysis, fundamental analysis, that is so the beginner stuff, all the stuff that I just did, how to identify the trend line, how to identify the pivot and resistance, and all the technical chart patterns, all of those, as well as our Facebook group where I actually sent out the signals, my own signals. So that is valued $20.99 per year. So we have a campaign going on again right now. Definitely go ahead on investiva.com and check this out. That is something that you probably need. And for Veronica and all the other people who are asking about my book, I know that some people outside of the U.S. have been having difficulty using our credit card system. So if you want to get the book and you're failing to use a credit card system, go ahead and chat with Natalie. She's going to guide you how you can pay us with PayPal, and then we'll send you the book on that. Based on that, the book is also for beginners. It's real, and the new edition has 30 pages of bonus secrets and all the things that I've been sharing with Investigative Insiders. So definitely let's try this one out, and I talk about all that over there. So that's it about that. So again, to answer your question, Veronica, when the way that I come up with the stop loss are two ways. One of them is a technical analysis, and the other one is your own risk management. I don't know about your financial health right now, so I cannot tell you which one to go. So for a person, I know really don't say this, but you really have to be confident with your financial health. And if you do have a higher risk appetite and a higher risk tolerance, you could even use a 50% Fibonacci level, which is 0.67 as your stop loss. Myself, my risk tolerance is pretty high because I have a very big account in Forex. So I actually go without a stop loss. But because I do it, that doesn't mean that you can do it, because it really depends. Especially, so the only way, first of all, let me clarify that the only way that anyone can ever go without a stop loss is, first of all, you would have to have sufficient risk tolerance. Second, you cannot use leverage if you're using a no stop loss strategy. All right. And so far for Kiwi dollar, we're waiting for it to break above 0.73. We're going to target 0.7440 for people with lower risk tolerance, 0.7530 for people with higher risk tolerance. If it doesn't break above it, this is the pivot line. 0.7224 is your pivot line. A break below that, you can target either the upper band of Ichimoku, which is at 0.71. I didn't write that here, so write that down. And the next support level is 0.70. A break below the Ichimoku is going to signal a reversal, and that is when we're going to target 0.67 as a bearish target. All right, so that was Kiwi dollar. Next, I want to quickly go ahead and talk about actually pound Kiwi, which is interesting because we talked briefly about Brexit. And so with Brexit, obviously British pound dropped versus a bunch of currencies, including Kiwi, and it broke below the Chimoku, all the bearish stuff. But I tweeted and I shared with the Invest Insiders on Tuesday that we could have, there is a possibility we've bottomed out on British pound versus a bunch of currencies, including that of pound Kiwi. It has definitely bottomed out versus, let me actually show you over here. So pound dollar, right? Great British pound, US dollar. Definitely bottomed. So I called it out exactly on Tuesday, and it started going back up. So people who were following me, they already made money at 1.30, went even above that. So, well, this bottom out was a little bit better because US dollar is also weak, and so British pound is gaining momentum. So it's a very good combination of a well, strengthening currency versus a weakening currency. But even you can see that in pound Kiwi. So the Kiwi itself is a little bit stronger, so the bottoming out is not as vivid, but it kind of looks like that here, which is the all-time low for the pair. It is the all-time low, right? So this could be a actually bullish signal for Kiwi pound. So this is, well, previously in 2013, apparently it touched it as well. It touched it again. But one thing about pound Kiwi is that it just broke below the HMO class. So it's not as strong, actually. I take it back. I take it back. Let's take a look at, so Kiwi is getting stronger. We want a weak currency. What else is weak? Everything else is, so besides US dollar, everything else right now is actually gaining momentum. But Euro Kiwi actually, this is also a wait and see situation. Euro Kiwi is approaching Ichimoku cloud on the daily chart. So for Euro Kiwi, I'm not going to go into details. I'm just going to give you some heads up. So with Euro Kiwi, we have, if the break, so this is your wait and see. Wait for a break above the Ichimoku cloud. If it does, then you can go ahead and target which is 167. Okay, a break above Ichimoku cloud, target 167. That is Euro Kiwi. All right, another one. Let's take a look at pound Kiwi yen. Yen is strengthening, so is Kiwi, and therefore it is consolidating. Not very interesting. The range here has been between these two lines. So the best strategy for Kiwi yen would be range trading between, I would go actually these two lines. So between 76 and 71, that is your range trading area. For Kiwi yen, are you writing it down? 76 and 71. I'm going to write actually 72 just to be a little bit more cautious and responsible. So this is your range trade. What does range trading mean? Right now, the Ichimoku cloud is flattening. So it just broke above below the Ichimoku cloud. It's Kiwi yen. So it basically depends which one's going to be stronger, Kiwi or yen. Both have been pretty strong right now. So with that, you can either target 0.72. If it breaks above the Ichimoku cloud, you're going to go ahead and target 0.76. Or if you don't have enough risk tolerance, you're going to use your Ichimoku. You're going to use your Fibonacci retracement within the range. A break above the HMO cloud, your first resistance is here. 78%. At 75.50 almost. I'm going to go a little bit below it at 75. All right, we covered a lot today. Again, so guys, thank you so much for coming today. If you had any questions, next week we're going to talk about U.S. elections. It's going to be very, very interesting. Definitely come by and say hi. It's going to be very interesting. It's pretty much heating up. Definitely follow me on Twitter, both on Investiva and in Canada. Investiva is a little bit more timely, so definitely follow me on Twitter and Investiva. Follow me on Investiva on Facebook as well. Our videos on YouTube, all the stuff. So keep in touch. Get my book, Invest Responsibly, and contact Orbex if you have any questions, if you have any requests for future webinars, all the stuff. We communicate with each other. So definitely go and contact them if you have any questions, any requests, any topics for webinars that you want to cover. And hopefully we're able to do that. You've been great. Thank you so much for interacting today, and have a great day. Good luck with your trading.